Hey everyone, welcome back to Corporate Decoder. Today we're cracking open Denali Capital Acquisition, Corp's latest filing. And let me tell you, it's a real nail biter. This SPAC is trying to merge with Semner Pharmaceuticals. But first there's a plot twist involving delisting and a whole lot of debt. Will this deal actually make it to the finish line, or will it all end in a dramatic implosion? So Denali Capital Acquisition Corp, a special purpose acquisition company or SPAC, is trying to merge with Semner Pharmaceuticals. But it hasn't been a smooth ride. The SEC document we're diving into today reveals a complex situation filled with high stakes and potential pitfalls. Remember to join the Discord channel in the description below where we can discuss this wild situation together. The Denali board even got a fairness opinion about Semner's drug asset. That should be a good thing, right? As of August of last year, CB Capital arrived at the following valuation range for the Semner acquired assets. From a financial point of view, the transaction is a fair one. And as we go on, you might want to keep in mind that the market capitalization of Semner's parent company, Skillex, is only around $41.8 million. As of April 18th, 2000, $1 billion and 235 dollars out of April 18, 2025. Let's break down who owns what after the deal. The documents give us a glimpse of pro forma ownership, and it's very insightful. Denali public shareholders, that's you and me. If there are no additional redemptions, are expected to own only 0.02% in new Semner. Meanwhile, the biggest chunk, a whopping 92.41%, will belong to Silex, Semner's parent company. Under several redemption scenarios ranging from no additional redemptions to 100% redemptions, Skillex will still own over 90% in the form of new Semner common stock. That is some heavy concentration of ownership. Now, let's talk about who gets what in this deal. New Semner will use cash from the trust account, that's the SPAC's war chest, to pay Denali's transaction expenses. How much are we talking about? About $10.5 million loaned to the $2000 $2020 to the $20. This is important. This is an important potential conflict of interest to keep in mind. The sponsor, at its option, can decide to take shares instead of cash at a price of $10 EON per Denali private placement share in connection with the consummation of an initial business combination, and what's each related party going to get in interest in securities. Here is a quick breakdown. Again, this is subject to the market conditions and what people decide to do. The sponsor currently holds 532,500 Denali Class B ordinary shares. The sponsor also currently holds 500 Denali Class B ordinary shares on September 4, 2024. Hufeng Zhang, Lei Huang, Jim Mao, Yu Sun, and Kevin Vasily. All the directors and officers hold 20,000 shares each, and the Denali underwriters are expected to receive the common stock consideration upon closing of the business combination. Hadi Wang, Jim Mao, Yu Sun, and Kevin Vasily. All the directors and officers hold 20,000 shares each, and the Denali underwriters are expected to receive the common stock consideration upon closing of the business combination. This summary from the prospectus has different redemption scenarios for Denali public shareholders. Under no redemptions and consultants fees paid in shares, and the underwriters having shares. Total shares at closing is over 217 million. A 25% redemption changes this total to 217.615, and so on. You get the idea. They also give us a breakdown of the IPO price per share and the net tangible book value per share. Under no redemptions, Denali's IPO was $10, and with the net tangible book value per share, it's 1019 per share. Difference is around $13.42. What does this mean in simpler terms? Basically, the book value is much lower than the initial offering price. Denali has an aggregate of 43,739 public shares outstanding prior to any additional redemptions. A maximum of 6,000 shares of Semner preferred stock are outstanding as of immediately prior to the effective time. Semner option holders will be diluted by 50 million shares, and consultants will receive shares of over 8 million. These add up quickly. Let's dive into the potential dilution for Denali shareholders who choose to stick around. In a no redemption scenario, Denali public shareholders end up with just 0.02% ownership. Even worse, with maximum redemptions, public shareholders are wiped out completely. Tax implications. To summarize, you'll likely want to talk to a tax advisor about this deal and any implications for you if you are a US holder. Now let's talk about the potential conflicts of interest. The sponsor, Denali's directors and executive officers, as well as Skillex, all have personal or financial incentives that public shareholders don't have, and they could in fact make Denali shareholders' investments worthless. There are many areas of potential conflicts in this filing, and these are the types of things we look at to find potential red flags. Denali's officers and directors won't commit their full time to Denali's affairs. At the option of the sponsor, the $1,408,200 affairs at the option of $11,15,037 promissory note and sponsor extension convertible promissory note and sponsor extension convertible promissory note and sponsor extension convertible promissory note respectively may be converted into Denali private placement shares at the price of $10 and $11,15,037 and $11,15,037. Principally 125 under each of the sponsor convertible promissory note and sponsor extension convertible promissory note as sponsorson per Denali private placement share in connection with the consummation of an initial business combination, but it does not have a material effect. If the business combination is completed Skelex. And of course, let's also mention risks. Some of the biggest risks include that Semner has a limited operating history. Semner needs more funding. The government can change regulations. There are risks from Celex Holding Company, and finally risks related to ownership of new Semner common stock. Now, what's the bottom line? This SEC filing reveals a complex deal with many layers. While the potential of Semner's drug span aftfen al 2 span, SPL a Kimola 2 span, SPNA turf span, SPN Gurb 2 span, SBL 5 of OUR, this deal is really in the best interest of everyone involved. It appears that the sponsor and Celex have strong incentives to complete the merger, but it's hard to see how any of this is beneficial to Denali shareholders that aren't tied to the sponsor. For someone looking at the long term, the high levels of debt and the reliance on the new management being able to hit aggressive targets present a high level of risk. Alright, that's our breakdown of Denali's latest filing. What's your take on this merger? Boom or bust? Let me know in the comments. If this analysis was helpful, hit that like button and subscribe for more deep dives. Don't forget to check out the Discord in the description for even more conversations. Thanks for watching. See you next time.